All right, hello, welcome traders. It is Monday, June 2nd, 2025. The year is flying by. We're 5 months into the year. Had a great month for the month of May. Looking forward to another great month here in June, and we're off to a fantastic start as of today. So great first day of June. If I'm looking at the accounts here. We put on a bunch of new trades today, so we got in a handful of new trades. We actually closed out almost $3,000 worth of trades today. I can go through some of those with you, but we closed out a ES covered strangle today for almost $1,400. We closed out a put spread in UNH, added a new one today, and we closed out a Strangle in TLT for a 50% winner. So overall, really, really good stuff. And then we added some new trades today. So let's talk about some of the trade opportunities. Let's talk about what's going on out there. I've been traveling, haven't felt great for a couple weeks, and just pushing a lot right now. So hopefully I can be back with you guys on more of a regular basis here, sharing some trade ideas. We got some pretty cool stuff that we're doing. And like I said, had a really, really good month. The month of April. My voice is still not 100% yet. But the month of May, we were up $9,823, which is 3.8% in realized gains. But from a net lick standpoint, I was actually up 23,292, which is 9.01% for the month. So a $23,000 gain month in May. Everybody should have had a pretty decent May. Markets went up pretty well, but we made over 9% on our trades for the month. So great stuff. 23,292. So we'll take that and run with it. Let's take a look at what we're trading now. So we've got a lot of different trades working, and I wanted to share, the kind of the core strategies again with you, and then we'll look at some trades and some chart setups. And I'll give you three trades before the end of this is over. So if you stick around with me, I'll get you three trades that we're in for the week this week. But really, I'm looking at primarily the 112 calendarized version, which has been great, held up great in April when we had a bit of a vol spike and a downturn. Ended up, worked great there. Had another great month this month. In fact, overall for the year, the 112C trade is up over $10,700 on the year. So that trade's doing really, really well. That's one of our primary strategies. Another one of our primary strategies is I'm doing an income poor man's covered call on both SPY and QQQ. Now that trade, from a net lick standpoint, is doing fantastic this year. It's been a great trade for me. Now the difference between an income poor man's covered call and the standard poor man's covered call, where you're simply buying the leap, which we do. We buy the leap over a year out in most cases over a year out. And then we're going to sell covered calls against it. Pretty simple, right? Pretty simple strategy. A lot of people utilize that. I think it's a great strategy out there, but we use this on SPY and QQQ primarily on my account. But the difference is for me in the investing account, the poor man's covered call, great. Selling farther out of the money covered calls just to generate some additional gains as you really rely on capital appreciation. In the trading account, it's not the same. I'm looking for short-term cash flow is what we're doing. So we're selling primarily at the money covered calls. And we generate a lot of premium, which is mostly extrinsic value. And I'm looking for just to get the extrinsic value out. I'm shooting for about 0.75% to 1% a week. It seems maybe like a lot, and for some of you it's not, because people talk about, oh, I make 10% a week on my covered calls. Great, we don't do that. I don't do that. Okay, I'm a lot more conservative than that, even though this doesn't sound maybe as conservative, but I'm shooting for right around 1%, maybe a little bit less in a week's time worth of extrinsic value. So I will go as close to the money as I can to get my value out of that. Sometimes it's right at the money. It could be slightly in the money. It could be slightly out of the money. Give or take somewhere between that 40 and 60 delta on average, but not the 30 or 10s or 15s or whatever that most covered call writing uses. The at the money, I just want the extrinsic. If we blow up past it, okay, fine. I will close the covered calls for a loss, but not until I get all of my extrinsic out of it. So the intrinsic value, whatever that is at the very end, that is a little bit of a loss. But the long calls that we own will have risen by about that same amount or more, which makes it still overly profitable as a whole. But I'm not writing these way out of the money so that if they're breached and you write them and it swings back down, you're taking a pretty good hit on the underlying. I'm not doing that. This is an at the money permanence cover call. Anyway, that's my second strategy that we rely on pretty heavily here, and that's been a fantastic strategy on my SPY. It's up right now over 26% in the last just over 3 months there as a trade, and the QQQs are up over 20% in 45 days. And I was in it, Nvidia for a little bit, only for 30 days, but made 6% on that. So again, I'm not looking for gigantic gains. I mean, 6% in 32 days on Nvidia, great opportunity for me. We're doing a little one on Apple, which is not my favorite thing right now. So I'd like to actually get out of Apple. I didn't really want to do that in the trading account, but we'll do Apple. And I've also got one on MicroStrategy running right now as well, generating really good uh, cash flow on MicroStrategy. Sometimes I'll do that in the money, mostly at the money on those. All right, so there's two of the primary generators to what we do. Also, still doing strangles. We just closed a TLT strangle today. I'm in a gold strangle. I'm in an oil strangle. Both of those are doing fine. And then on my spec trades, primarily selling naked puts, selling a couple put spreads, and some 112s, primarily on futures, oil, gold. Those are my two go-tos when it comes to that. I'll also potentially even look at a 112 trade. And these are just 60-day standard trades, not logging, not layering lots of them on and laddering them, getting overly notional on any one uh, ticker. I'm also looking at some of these on individual stocks that may be setting up over the short term, 12, 14 days out, something along that lines. We'll do some of those. But primarily, I'm a premium seller. So that's really the goal here. A lot of naked puts, some cash secured puts, some PCSs, some put credit spreads, and then your 112Cs and your permanence covered call. So all that somewhat premium, whether I'm selling puts, selling calls, selling both as a strangle. Either way, love to sell the premium. Been a great strategy for years for me. We've had two down, pretty significant downswings, um, but we've been able to rally from these. And ahead of those, we really cranked up the accounts pretty significantly. So we've been seeing, 30, 50, 82% a year gains. Last year down due to August. This year we're just down a bit. We've almost recovered the majority of it from an April swing down where I liquidated some of the leaps that I had along with some 112 trades just to really tweak the account, make it a little bit better, more resilient, which we did. So it's been doing great since then. Anyway, let's get into some of the trades and look at some of the charts that we've been doing. So now that you understand the trades that I am in, let's take a look at some of the charts and see where we are. Let me get off the screen because you don't need to see me while you're looking at charts. Okay, so let's quick take a look where we ended up today. So SPY up 0.5% today. This thing's really just consolidating around in this zone. We broke above the 200-day back here, a little bit of a gap. This gap on SPY really hasn't been filled yet, so we will keep an eye on that. I could probably draw this gap in there a bit. So if we're looking at this gap, has not been filled. We'll see if it gets filled. The 50 is approaching the 200. We could get that golden cross at some point here if we don't reverse and head lower. We are bumping up into some resistance. We've been struggling a bit here. However, if we can break through this resistance up here and a pretty good reversal the last couple of days, I think we run up, 605, potentially new highs at, above that. So we'll see what happens. But right now, nice bullish uptrend, series of higher highs, okay, and higher lows. This thing looks fine. If we can get above this 595 level, the previous high, recent high here, I think that'll give us another leg up. Either way, I'm bullish on what we're looking at in SPY. And if we take a look at the weekly and daily charts on SPY, and we'll take this line off. Don't need that anymore. Uh, Even the weekly chart, good momentum to the upside. Still have that gap to fill. We'll see what happens. But I think overall, you got to be pretty positive. The 50-day on the weekly looks solid, and we're above the 50-day here. Even a pullback to the 21 or even the 50 wouldn't be the worst thing for the market to give us another leg higher. We're trading above this February anchored VWAP highs that we had back here, which is all a good sign. So overall, I like where we are. I would continue to be fairly bullish overall here on SPY. All right, let's jump into some of the futures here. For looking at oil, we've been in this trading range for a while. Great day on oil today. As we look at it, looking at some of the OPEC output, steady production increase, nothing crazy going on there today. They didn't cut production. They didn't jack it up. Just steady increases, which I think is fine. It keeps us generating along these lines here. If we're looking at the weekly chart, okay, still in the overall downtrend, but we're getting really, really close to potentially breaking through this downtrend. We'll keep an eye on that. This downtrend has been in place for quite a while, dating back to, I believe, February, January timeframe. We've got a lot of overhead resistance, not a lot below here in this channel. I think this thing sets up really well to strangle. We've got strangles on an oil. One of our strangles is up 26% in just 19 days. That one's great. I've also got a 112 that's up 50% in 13 days. Either one of those, I think, works here pretty well. You could do a 112 trade. Okay, give yourself a little downside protection, no risk to the upside. I think that serves well here. I think you could also look at a Jade Lizard in here, and I think Strangles continue to look pretty doggone good. We're right around that 50 EMA here and right around the 21 as well on the daily. We're right around the 21 on the weekly. RSI is kind of right in the middle. I think sets up pretty well for a lot of different trades on oil, and we've got several on. Gold, I'm also in several trades here. Gold really took off here today. So huge move on gold. I mean, gold was up 80 some bucks today. $81, almost $82 on gold, breaking the downtrend line. We can get rid of that thing. We're going to be now looking at, do we run into the upper Bollinger Band, 3 ATR levels here? But you saw it coming, which is why we got long a lot of stuff. So we've got two 112s on gold. One's up 85%, one's up 60% in less than 30 days on each. We've actually got a strangle on too, which is actually up 10%. That strangle's been on for 18 days. It's up 10%. We're well within those limits here. On it, I think you could strangle gold here, but I think the 112 is still an excellent trade. I am positive on gold, and I think it continues to march its way higher in chunks throughout the year. On the other side, you got bonds, which are pretty sad down here. Obviously, the downtrend continues. We're trying to put in a little bit of a base here. We'll keep watching this. If we watch the U.S. Um, Dollar, that thing continues to struggle here. We thought maybe we'd get a little bit of a bounce, but the dollar's maybe finding a little bit of a bottom here, or maybe not. Maybe it's going to head lower. And if we look at the yields, yields have backed off on the 10-year quite a bit, down to 4.46. On the 30-year, yields are at 4.99, which is actually still pretty elevated overall. So as yields continue to stay elevated, I think bonds continue to stay low. I don't think the bond vigilantes are done. I think they're going to push these things lower, but I think you can still play this thing with like a strangle as it oscillates before between that. I don't think it's the worst thing right now to be playing bonds with either a strangle. You could even look at a 112 or an inverse J lizard, which gives you no risk to the downside. I think either one of those trades would be great. Uh, Copper, I think it's been a good strangle opportunity. Continue to think it's a good strangle opportunity in here. So we'll keep watching copper for strangles. Looks like maybe a little bullish momentum's getting going. Silver has been a great strangle for a while. Big update today on silver. If we're looking at the news, uh, just tariff worries, gold jumps, silver's up. As these headlines just keep coming out about tariffs, the market, I think, is starting to get immune to it. So the market dipped initially on some of the fears that the China-US trade deals might be pretty much dead. You got to just trade with a vision on the weekly charts and not the daily or intraday swings. Just trade what you see. I think the market's becoming a little bit more resilient, like I said, to all of this trade news. You got the taco news out there that Trump always chickens out. So you got that word out there, which is probably not sitting well with Trump, which means maybe he'll do something stupid here, but uh, maybe he won't. Maybe he will. I'm not saying these terrorists are stupid. I'm just saying maybe he'll do something stupid, or be a little bit more bullheaded than he needs to be. But we're still not seeing any tariff deals getting done with any countries out there. But I just don't know that, we'll stay where we are. I don't think we're going to head back down to the previous lows on things. I think you just have some headwinds right now. Things will get resolved. We'll figure it out. But I think we know what the worst case looks like, and we're off of those. Can we head back down a little bit? Sure. We'll see what happens. All right, Aussie dollar. I think this thing has been in a pretty good sideways trend, has been also another really good strangle opportunity. Now that I took the TLT strangle off today for a 50% winner, I'll be looking to add a new strangle. I like to keep about three running, and there's plenty of opportunities out there between the Aussie dollar, silver, copper, uh, and bonds, and maybe oil as well. If we take a look at RTY, the small caps, I don't think this is a bad strangle opportunity either. It's not always easy to get in and out of, but this thing's in a pretty good consolidation range. I think we could see small caps just continuing to not do much of anything right now. All right, let's jump into a couple quick stocks and take a look at where things are. Amazon did not get the gap fill here on this pullback, still maintaining this uptrend line. It looks pretty good. Amazon could be, if you look at the weekly, it's really getting moving and still has more upside to go. And the daily, I think, still has some more upside to go. So I think Amazon not looking too bad here. I would consider getting into something a little bit more bullish on Amazon. Nvidia had a decent little pullback, but not enough. Still elevated. I don't really love it here. The weekly's not bad. The daily, it's just not giving me a good entry point on Nvidia, for at least from a trading standpoint. So I think I'd stay away for now. Hood, this thing is just off to the races. I just love this thing. I think you just wanted to be long Hood. Can you get into it now? Man, I don't think I would. Right now, I think you got to wait to see, does it pull back? Hood's starting to turn a little bit into a Palantir type of a move here. If we're taking a look at, the financials on it, the PE is 36, definitely not Palantir stratosphere. yet, but you got PE moving up. This thing looks pretty good overall. I like Hood a lot on the financials. I would love to get a pullback to this 21, at least the 21, if not the 50 on the daily. That would really give me a reason to jump in. All right, Palantir. I just mentioned it. This thing's off and running like crazy. When you look at the PE, 534 is stupidly ridiculous. Now, it may never drop to where it should be. Okay? And trading where it should be essentially like the $30 range. I don't know that we're ever going to get it to that point. I hate to miss out on things, but I did put in a trade idea this weekend out on Twitter and to members on Palantir. When I take a look at that trade idea, see if I can pull it up here. Trade ideas. We have one for HIMS. We have one on Uber, MicroStrategy, and then Palantir here. Uh, when I looked at Palantir, it was very much of a cup and handle pattern. In fact, I think if we switch to uh, the day chart, the daily chart on Palantir, let's take a quick look. Let's go. Let's go. I want to be quick with you guys and get to some ideas. Here's that cup and handle. So this has been a pretty good cup for the most part right here. Maybe a little, okay, more like this, but a pretty good cup, a bit of a handle. Now it's starting to break out above this handle line up here. I think Palantir really starting to set itself up uh, halfway decently here for another run higher. Stupidly overvalued, but I would be okay. Maybe looking to get into something around the 100 mark. I know we're 30% above that right now. On any pullback here, I would probably take a shot at least a trade. I think it's not quite overdone yet. Maybe has a bit more to go on this cup and handle. Keep an eye on it. All right, Google. Google trading in this channel. I think this is not bad. I know there's a lot of lines on here. Apologize, but I'm not going to probably change it right now. Let's take these fib levels off. That'll be a little bit cleaner. All right, so we're in this nice channel higher. This pullback was not bad on Google today. So it dropped a little bit today, and looks like it's down in after hours trading. A little bit lower here, and Google might be something of value. Not my favorite stock anymore, but might be okay. Tesla, you're getting a bit of a pullback here. I think it's trying to give you an opportunity if you missed some of this run to sell some naked puts on it or put credit spreads on this pullback. I think this is giving you a short-term opportunity. Give it a day or so. Let's see. The momentum is down. If it keeps pulling back, I think this gives you a nice opportunity to get in on Tesla. Meta, another one of these kind of cup and handle type of scenarios. Really having a great day today. Off to the races. Microsoft, not doing much of anything. Don't love it. Apple, a lot of stuff going on in Apple here. But you've got some support down here, which I think is not bad. Apple trying to recover. The longer term looks halfway decent, some decent consolidation going on here. You're in this channel, which I'd love to see us break, but we do have some support below. We have this downtrend line that we're heading into, which is a secondary downtrend. I think if we break that, can we get through this 50? It might take a little bit of an effort to do that on Apple, but I'm in this thing with a bit of a poor man's covered call right now, and not being overly aggressive on the calls. As you know, I like to sell more at the money in the trading account. This thing's doing okay right now on Apple, so we'll take it. We'll see where we can get to. Costco, a couple gigantic days after earnings. It's a little too far gone for me. I love Costco, one of my all-time favorites. Not trading it. Now, HIMS, very interesting. Came down, bounced along this 21 EMA, and now maybe trying to get its move going back. MACD reversing, oversold on the stochastic momentum index. I really like hymns here. And I did post this the other day on Twitter, if you're following me, or for our members, that I'm actually probably going to look for a put credit spread in here on this move. If we drop tomorrow, but I think this will be an opportunity to sell down below this 50 and anchored VWAP level here. I think this could give us a nice opportunity. I'll take the anchored VWAP off for now. I think they could give us a really good opportunity here. We'll see what happens, and we'll try the anchored VWAPs from the downside. Not bad. Not a bad spot right in here. I think there's a lot of support. You got the Bollinger Band, the 50, and the anchored VWAP all sitting exactly at 45. I think that's where you target hims and hers, okay, or hims, however you want to call it. All right, JP Morgan, not bad. Nice consolidation. Let's keep an eye on it, but I think financials could do pretty well here. I like Uber. I think this pullback in Uber has been an excellent pullback to the 50-day and the bottom of the Bollinger Band, almost. I'd like to give this a little bit extra room here, but I think it could be an opportunity. I really think Uber could be a solid mover uh, and continue after a little bit of profit taking here. And if we take a look over here on the weekly, it's more evident, uh, but also here on the daily, this previous pivot point high has served as a resistance and a support level previously, and maybe now another support. I think that's a good opportunity as well. So, bunches of things there. I also think this Walmart might be getting itself going again, uh, breaking through this resistance level here. Keep an eye on Walmart. I think it looks interesting. AMD, which, as many of you know, I cannot stand the CEO. I'll get all kinds of comments about it. But it's still way, way, way down off its highs. It had this, V bottom recovery. It was oversold, certainly. Okay. And now it's recovered. Uh, and starting to get a little bit overdone, in my opinion. If it consolidates here, it might not be a bad opportunity if you want to trade this thing or take a look at that. All right, so there's a handful, and then let me jump into two quick things. I know I'm going long on these. Bitcoin. We're at really what I consider a pretty good inflection point. I was in Vegas last week for a Kenny Chesney at the Sphere concert. We had a Bitcoin convention last week. I had another convention in Vegas last week. So pretty big uh, convention week and a busy week. I think the most enjoyable was the Kenny Chesney at the Sphere versus attending any of these conferences. But uh, you're getting you're at this inflection point. We're right at the 21 EMA. If we hold this and maybe can start to rally higher, then I think we're in pretty good shape. If we can't hold this, I think we come down and now we have the Bollinger Band, the 50. If we cannot hold those at 100, then I think we can see some things down. If we look at the weeklies here, I think you might be looking at stuff in the mid 70s potentially here. If it would at all come down and break into these low 90s or further, I think this is going to be the deal of the century. On Bitcoin, don't back up your Brinks truck and sell your children for it. But if we get the pullback, at least even to the 200 or below, I think that's the deal of the century on Bitcoin. We may not get that chance. This could be a bit of a pullback here. This might be our opportunity. I don't know. We'll keep an eye on it, but I like Bitcoin. I like to play it through IBIT, which is right at that 21. You got a handful of different support below here, the 50, the 3 ATR, the Bollinger Band, this previous support level. So I think there's areas down here that you could look to start selling naked puts, and I would be happy to take assignment on this thing anywhere down in here. And as far as MicroStrategy goes, uh, I really like it here. So I think this is a good, solid opportunity. Sure, it's going to move with Bitcoin. So if Bitcoin does break down, this is basically a levered play on Bitcoin. but I love the premiums that we get on these things. I've been selling. I have a poor man's covered call on this thing, so I've been selling out of the money or a little bit out of the money, just slightly out of the money, uh, and at the money covered calls, giving myself some downside room, right around that 40 delta. But I also own naked puts down around this 320-ish level here, which is the um, on this thing is your anchored VWAP dating back to these previous lows. It may no longer be as valid as it was, but that's the 3 ATR, the anchored VWAP, the 200-day here. I would love to see this thing again in this range, giving us an opportunity to get in. This has been a pretty good moneymaker for me. All right, so there you go. That's what we're looking at uh, right now. Good amount of trades on. So HIMS, good opportunities, Uber opportunities, MicroStrategy opportunities, Palantir opportunities. I think Lilly is another opportunity. I think this bottom, if you look at Lilly, and let's go here and point this out on Lilly. Okay. Since November of 2024, one, almost two, three, four, five hits to the 70710 level, roughly, give or take a little bit. And every single time it has bounced decently. You're seeing it again. I think Lilly, I don't think you've missed it yet. I think if we get any pullback tomorrow, I think this is an opportunity in this area to get into Lilly uh, for a little bit longer. And those are my trades. Those are my It's what I'm looking at right now. All right, so hope this was helpful for you. Gave you at least 5 trades, covered the markets with you. Had a great month of May. Looking forward to a month of June. We're already off to a great start, over almost $3,000 in realized gains today. So that was fantastic. We look to keep going. And I'll tell you the last thing, that the gift that keeps on giving, let me share it. And it's not a stock that I normally track. And I hate this stock because I've gotten burned on in the past, and I hate most stocks. Okay. Prefer to stick to my indexes and some futures, and that's pretty much it. But we have 2 or 3 stocks that we'll trade. This is not one I normally watch, but this is a gift, folks. And this is my last one with you. So if you take a look with me, it's UNH, it's United Healthcare. Okay. Gigantic gap, another big gigantic gap down earnings, another big gigantic gap down here on the news of the Medicare issues. But since then, it's just been consolidating. Our 3-day rule is long past. I have been selling naked puts and put credit spreads on UNH decently out of the money here, really somewhere around the 210, 200 levels, which are way down here. Okay, past the bottom of the Bollinger Band. I think you could probably even do like the 240s and be okay in here. I don't know that this thing gets worse than this 248. I think this is the gift that keeps on giving. Trade what you see and trade according to your plan. But if any of these ideas fit your plan, have at them. All right. We'll see you guys. Hopefully, be back more this week with a lot of cool stuff. And we'll see you guys. If you like this video, give a thumbs up in the likes down below. Help me out a bit. And we'll see you guys. Bye bye.